Welcome to the Proinvestor AI podcast, your go-to source for insights on the Indian stock market. Here, we break down the latest earnings reports, market trends, and financial guidance to help you make informed investment decisions. Today, we are diving into the recent Q2FY25 earnings report for Cholamandalam Investment and Finance Co., or Chola Finance, and discussing how their business is shaping up for the future. Let's get started. Earnings overview. Chola Finance posted steady growth this quarter, though with some softening in its operating metrics. Let's look at the key figures and trends driving their performance. AUM growth. Chola Finance's assets under management, AUM, grew by 6% on a quarter-over-quarter basis and an impressive 33% year-over-year to 1,64,643 crore rupees. This growth outpaced expectations due to a lower-than-average repayment rate. Disbursements. The company's quarterly disbursements totaled 24,313 crore rupees, reflecting a 13% year-over-year increase but a more muted quarter-over-quarter change. Vehicle segment disbursements softened by 5%, while the new business category also saw a slight dip. However, home loans and loans against property, LAP, saw sequential growth of 11% and 3%, respectively. Revenue and margins. Chola Finance's net interest income, NII, showed strong growth, increasing by 35% year-over-year and 5% quarter-over-quarter to reach 2,713 crore rupees, slightly above estimates. This was driven by higher other income, including a 49% year-over-year jump, which boosted overall revenue growth by 37% year-over-year to 3,238 crore rupees. Operating costs and profitability. Operating expenses rose significantly, with a 39% year-over-year increase driven mainly by higher employee expenses. This pushed the cost-to-income ratio up by 162 basis points to around 41%. Pre-provision operating profit, PPOP, grew 35% year-over-year, reaching 1,922 crore rupees. Credit costs and profitability. The company's credit cost stood at 1.73%, translating to a modest 2% sequential growth in profit after tax, PAT, to 963 crore rupees. This was a slight miss on analyst estimates, as elevated credit costs impacted net profits. Asset quality. The gross non-performing assets, GNPA, and net non-performing assets, NNPA, ratios rose to 3.8% and 2.4%, respectively, with a consistent provision coverage ratio of approximately 35%. Liquidity position and capital adequacy. On the liquidity front, Chola Finance maintained a robust position, with an average liquidity coverage ratio of 202%, well above the mandated level of 85%. The company's capital adequacy ratio also improved, standing at 19.5%, supported by Tier 2 capital additions. Business outlook and guidance. Despite some softening in operating metrics, Chola Finance has reaffirmed its positive guidance for the financial year. Here are some points from the management's outlook. Diversification strategy. Chola Finance is making strategic shifts to diversify away from its traditional vehicle finance business. Non-vehicle segments, including LAP and home loans, grew at faster rates than vehicle finance, reaching a 44% share of the total AUM. Management aims to reduce the vehicle segment share to around 50%, with a greater focus on LAP, home loans, and SME finance in the coming years. Cost and profitability pressures. While the company's profitability remains strong, management acknowledged that elevated operating and credit costs could continue to pressure margins in the short term. Nonetheless, they expect AUM growth and profitability to stabilize over the fiscal year. That wraps up our analysis of Chola Finance's recent earnings. The company continues to show resilience, with solid AUM growth and a diversification strategy aimed at sustaining long-term value. Here at Proinvestor AI, We are dedicated to helping you make smarter investment decisions by providing clear insights and analysis on the companies that matter most to your portfolio. Be sure to visit our YouTube channel, where you can find the full conference call and detailed breakdowns of company earnings. Join us in empowering retail investors across India with the tools to succeed in the stock market. Thank you for tuning in, and stay tuned for more insights.